Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an amazing trading day yesterday as we saw the markets do kind of exactly what we thought they would do. A little bit of sideways price action, a little bit of rally throughout the day. So hopefully you're able to catch some of the moves as we spoke about them yesterday. Although we've come up to a little bit of supply, not a whole lot of reaction off of some of these levels. So let's go ahead and dive in as we do each and every day. Do me a favor, if you're new to the channel, click the subscribe button, hit the notification bell, and share this channel with others. Really helps with comments and with you guys sharing the channel. I really would like to see the growth of the channel. You guys mean a lot. I appreciate all of your comments. So let's go ahead and dive in. S&P this morning. We are down 12 points this morning at the open. Now, we had a potential confirmation short happen yesterday, but let's take a look at price coming into that confirmation short. First of all, we had basing before the level, which if you guys are pretty familiar with that, know that I call that the kiss of death. Second thing is that we came into the level and then came right through this confirmation area. Now, why did that level not hold? The level didn't hold, first of all, because of the basing before the level. Second of all, the time of day was terrible, which is why we used a confirmation entry. Price popped right through it. Now, we unfortunately did not make it all the way up to our 15-minute zone up here. Now, originally I had this area, pegged as a wick over wick. It wouldn't have made it into that level either. So don't feel like you missed out by having this level here a bit higher. Now, what did that do on our 4-hour? Well, on our 4-hour, what that did was that gave me a lower swing low and now what looks to be a potential lower swing high. So what I'm going to do is come back into here on this smaller time scale, and looking at this chart, I'm thinking that we may have a reversal at this little area right here, this little 15-minute zone, if we get the retest. It's a very small level with a small amount of risk and exposure if indeed price does come back into here. So that allows you to get in without too much risk and take advantage of that move if we pop back up. This is a little bit after the London Open, but I think it's still a pretty clean little area for a potential reversal if price comes back into this region. Of course, our breakdown level from here still stands, and that level is still very much in play. Moving over to the NASDAQ, same picture in the NASDAQ 15-minute chart. If we go to because remember, this is a 15-minute level, so if we look at the 15-minute chart, we had basing here just before the level. If you said, screw the basing, I'm going to take it anyway. 1, 2, 3, 4, 5, 6 candles later, the market had gone nowhere, telling you it's probably best to get out of this thing at break even. So this is why we have rules in place. We still want to follow the rules as they exist, which means that level would be something that would come off of my charts since price came through there. So that was a non-starter, if you will, on an entry. Price is now coming down. We did get, if you took the breakout, you did get a little run on the breakout trade. Now, we may have moved your stop after the 6 candles to break even, and then unfortunately that cuts us out of this little bit here at the end of the day. But price is coming back down at this point. So looking at a 15-minute level, very similar to our S&P level, this one's not quite as clean as our S&P supply on the 15-minute chart. We're actually coming down from there really cleanly at the moment. And I wouldn't be surprised if we got a little bounce off of here, off of this region. Let's see if this little region gives us a bounce for another short opportunity is really what I mean. Let's see if it gives us another bounce for a potential short opportunity. And so let's wrap our lines around this pivot for now and see if price gives us another short opportunity into this pivot. It may not make it back to this pivot, but we'll have that one in place for today. In the Russell, we didn't come into any of our levels that we had identified in the Russell, as those markets are still in between our levels of supply and our potential breakdown just above this area of demand. So since we are sitting kind of in between both of those, let's move this to a 15-minute chart. Very similarly to the NASDAQ and the S&P, we have this level up here. I like it in the NASDAQ a bit better, although this one's come to this area of demand. We've already gotten one bounce off of that zone. I think the chances are prices are going to continue to fall in this level. So my thought on all three of these markets are that the markets are still trending sideways a bit as we have big earnings coming out this week. We've got FOMC coming out this week. We have GDP being announced this week. And so it could be a fairly sideways week with a lot of ins and outs, with a lot of up and down in between the markets, heading into this week. So just keep an eye on those markets for today. Next, let's move over to our commodities page and our crude oil trade. Oh, this was frustrating. This is so close, yet so far away. It just a bit outside, as it just missed our entry on the 15-minute chart on that one. Now, we placed our levels at exactly the right spot, so missing that entry is okay. My rules are I just have to switch that to a confirmation trade at this point. So switching this to a confirmation trade at this point. I go back to the 1 hour. When I look at the 1 hour chart, my 1 hour chart really didn't give me any new levels to lean on or anything to press from a trade perspective. 4 hour is still trending up. It's just losing a bit of steam, continuing its weak climb higher, which typically leads to a downward move, but we don't have a clean breakdown level as of yet, so I would wait to set up if we get a 3-touch area for a breakdown. Gold continues its march higher, but we did get a pretty strong pullback yesterday as it came overnight into our area of demand. Now, we had 2 demand areas set up here. One was the 15-minute level. The 15-minute level cut through like a knife through butter. But our 60-minute level, which was the cleaner of the 2 zones, held very well in the overnight, and we've gotten a nice move off of the 60-minute level right there at the European market open. So if you took that long on the 60-minute level and you're still in that trade, prices have given you, that level was a small zone of about 3 points of risk, and it's moved 26 points on the rally. So even if you got stopped out on the 15-minute trade for 2 points, and then you got in on this one, you've gotten a 26-point move off of that rally, off of essentially what is a 4-point risk. So it's moved about a 5-to-1 reward to risk from price coming into this level. So at this point, if you've taken some money off the table, remember we talk about taking a little bit of money off the table at a 2-to-1 quite often. At the very least, take your stop, move it up underneath this pivot to 1917, so you've locked in in that case, you've locked in about a 4-to-1, 5-to-1 reward to risk, depending on exactly where you place your stop. I think that's a very prudent way to handle the trade from this point forward. Now, as far as the rest of the day's trades, what would I look at? Well, let's look for a potential area here where we could see some basing. Let's see if we get basing inside this region. Now, why am I picking this region? Picking this region because price came all the way down to here. We rallied up. We tried to come down again. We rallied back up. It was also resistance in here, and it's about halfway of this big move. So let's see if we get basing. We may not get basing. If we don't get basing in front of here and price pops through it, then wait for a retest. But we'll take a retest on probably a 15-minute chart as a way to get in. Natural gas still between our areas of demand and supply. Nothing new has been added in that market. Copper, we got a really nice reversal off of our copper level. For those of you that took our copper trade, you got a nice little move down. We now had basing just before the level, and the breakdown area has also been triggered. So you got a good entry on the short for the reversal, and you got basing before the level for the breakdown. So if you took the breakdown trade, your stop goes just above this area right here. You're about 2 candles into that position. If you're not in it yet, allow yourself. You can still jump in it if you really want to give that a run. And the reason we have that is because our 4-hour trend tells us that we think price can make it all the way down to here, possibly even a bit lower based on the momentum slowing of that trade. We had soybeans as well. Soy is still between our areas of supply and demand. For those of you that look at soy, that's one that we've got no real setup on as of yet. We gapped down in this one, are still continuing the rundown. And I think if we get a retracement back up into this region here, you may have a worthwhile setup today, as there's a pretty clean wick over wick right there. And then corn, we had a gap and go trade set up. We actually gapped below, gave you a clean entry on the gap and go. And so if you took that, move your stop to break even at this point, right to this area here, so that at the very least you have a no risk trade, your target being 329. All right, bonds and currencies. So looking at our bonds and currencies, we did get a breakout of our ZN that we talked about yesterday, but we didn't get the prerequisite basing necessary in order to set that trade up. So price broke through, but it didn't really give me an entry. I'd love to say that it did. It did not. But let's look at this area here to see if this area here gives us a good entry where we have a little wick over wick on an hourly chart. The Aussie gave us a bit of basing here. We did get a bit of a breakout. If you took that one, you got 1, 2, 3, 4, 5, 6 candles later. It had gone nowhere. Told you to move your stop to break even. Didn't really give us anything. Didn't cost us anything. Didn't give us anything if you took that Aussie breakout trade, unfortunately. So we're just kind of hopping along sideways in this Aussie position. Still overall a net bullish feeling, although we are seeing a little bit of a slowing of momentum. Not a ton, as there's a potential double top here that is forming. And if that double top we get here does form, we may get a little bit of a pullback. But until we see lower swing lows, lower swing highs, we still have to maintain our bullish sentiment overall. So looking at this on an hourly chart, you do have a little level here. Not a great time of day. So let's keep an eye on this level later today as price returns to that area. Looking at the euro continues its march higher. On our 4-hour chart, we're seeing that it's an expanded move. We put a little reversal area here yesterday. Did not make it all the way back to that zone. I'm still going to leave that area intact. Matter of fact, I think that if we get some basing in here, we could actually have a nice run down to that area later today. But I would need basing for some sort of a breakout. Canadian dollar, same thing. We still have this area down here where I think we could see a bit of a breakout. Possibly some reversal shorts up above us. If I go to a smaller time period, there's this little area right in here. Not a phenomenal zone because we just about retested it, but I still think it could be in play. I like the fact that it was right at the European market open, and that could come back in to play. Now, there was some selling pressure as we almost came back to that region, which means this has to be a confirmation entry, but it is still valid to at least consider and take a look at. The Great British Pound, we've got 2 demand levels here down below us in the pound showing a bit of weakness, so let's see if we make it back down into those, so really no change. If we don't, let's look for, this is actually setting up for a pretty good potential breakout to the upside above this 2908. And then in the Japanese yen, we had a really nice reversal off of our hourly level, 1, 2, 3, 4, 5, 6 candles later, we finally got the move. So at this point, take your stop. You got about a 3-to-1 reward to risk off of this trade. So hopefully you're able to take a little bit of profit off of that one. I need to remove this one at this point, though, since we traded all the way to the bottom of that level. My next quality zone is actually way down here, and we could get a reversal and price drop. So all of these currencies are showing me that we could see some strength in the dollar, which would drive all these currencies down just a bit today. So let's keep an eye on all of those as they head into some of their levels. Remember that tomorrow is our live daily market commentary. So we will be doing our live session tomorrow. So please feel free to join us. Love to have you on our live DMC. As we will go through the markets, please bring your questions, bring your comments, and we will do it live. So I will talk to you soon, everybody. Hope you have a great day. See ya.